Hi guys, welcome back. So today it was the quadruple witch day, and it seems like we have safely passed through it. Nasdaq was up 0.76%. Even though there were a lot of fear last night and this morning, I still thought it was just a pullback from the recent jump up instead of a V-shaped recovery. So it's healthier to have some up and down within this range before we finally push through, as I still think the market has bottomed already and won't give us chance to grab the bargain again, something that people have panic sold 2 weeks ago. And if it really does give us a second leg for no black swan, then I would be really concerned, because that might be a really bad sign. To me, yesterday it was more like driving down the index by pulling down the FANG stock, the mega cap, to create some fear in the market using the bond yield again. So in the morning, it opened flat, went down more, but still got supported by the gap from before, and then bounce back up afterward. And right now it's still rejected by the 20-day moving average, which is right now at 13,237. So we closed today slightly below this resistance because the moving average is still pointing downward. So I'm hoping with this pullback, backtest the support and consolidate a little bit more, can eventually pass through this. And right now we focus on our stocks, because in the up and down market, it's more important to choose the stocks carefully instead of blindly buying the tech stocks or the recovery stocks just because we think the whole sector would grow together, or all the tech stocks would grow together. So now in this market scenario, it would be more important to focus on the individual stocks. Today, the volume was quite high compared to all the rest of the days, even more than 2 weeks ago when there were a lot of panic selling. So I do think in the morning there were some panic going on when it opened flat and went down quite quickly. But what was strange was that in the 5 minutes chart, we can see the last 5 minutes volume was significantly higher than normal days when we compare all the closing previously. But overall, it's usually bigger volume for the quadruple witch day. When we look at the past, this was the one in December. We can see the spike of volume here. And this is the one in September. You can see the spike of volume again. So it's normal to have bigger volume for this day. And if we look at the VIX, yesterday I said that I expect the VIX to rebound and then come back down. So we saw that in the morning it first went up because there was some fear in the morning, and then it came back down afterwards when people realized it was more of a false alarm. While Nasdaq went up 0.7%, Dow Jones went down 0.7%. It's mainly because it had been growing quite strong recently, so it had a need to come back, have a slight pullback, take a break, and then now it's supported by this 10-day moving average, and it bounced back up right away at around 32,500. It was down also because of the crude oil being shorted. I think this is one of the signs to control the fluctuation and the bond yield. So that's why recently Dow Jones has been acting a hedge of the Nasdaq, like we said 1 or 2 weeks ago. 1 day here, 1 day there. 1 day recovery stocks, 1 day tech stocks. This is what happened when the market is moving up and down like this. So that's why we need to focus on our individual stocks. Now let's go over our stocks. Baby Neo went up 4.1% today. Not bad of recovering the recent drop. It is holding through the support, getting back on the 10-day moving average, which is above 42.43 now. Like I said yesterday, it has been recently getting rejected multiple times and falling along with the 20-day moving average. Right now it's at 44.2. That is the resistance. Hopefully it can break through this moving average in the next couple of few days, and then the next resistance would be here at 47. Recently the EV sector is taking some time to cool off, moving up and down. Like Tesla is also getting quite beaten down because we see a lot of the traditional car companies are actually growing. Like, for example, Volkswagen. A few members have asked me about Volkswagen because recently it has declared that it would take over the #1 market position of EV sector and replace Tesla in the near future. So that's why the share price has been growing since. But at this point, I wouldn't recommend you to chase the traditional car companies because it has been going up quite a bit. It's basically going parabolic here, reaching the top quite fast with big volume too. So it's looking quite suspicious to me. And plus, I do think they have not shown or proved their ability to innovate as a company with such a long history. And their team and infrastructure were all built on traditional car models. So I don't think it's that easy to change their business inside out in a short period of time. So as of right now, I still think the new EV companies still had more advantage to innovate and adapt to the new business model for cars because they're completely a new team. They're young, they're energetic, their whole business, their R&D department were all built on the EV. So it's much easier for them to adapt to the new technology, the new wave, and the right mindset to innovate. So that's why even though we might still see the EV sector to cool off for some time, I would still rather stay consistent because I think at some point the EV sector would be back. Plus, I have addressed before in my videos before about NIO, I have addressed that in the Chinese market in 5 to 10 years, I do expect to see NIO as one of the top 5 car brands dominating in the market, especially for premium EV in Chinese market. This is one of the certain things that we can see. So for now, even though the traditional car companies are fighting back, I'm not quite worried about NIO, okay? And next, EH. EH was up 2% today, even though for most of the day it was down and then it went up near the closing of the market. Similar to NIO, EH is also beaten down by the 20-day moving average, and right now the resistance is at 46.38 and the share price closed at 46.3, slightly below the resistance. So we just need to give it some time for it to push through for further growth. And so far, I still think it's forming this head and shoulder bottom. Nothing has changed yet, so just give it a little bit more patience. Something to notice is that the earning would be next week. Some of the Discord members got worried and asked me whether I'm worried about the earning because we know that a lot of the recent stock had been beaten up because of the earning reports. Now, I'm not specifically so worried about this because first of all, nothing can beat the attack of the short seller report. It already drives EH to drop 60%, quite beaten down already, and then the correction. So that's why there is really a limit of how much it can drop. Second of all, the sales of the unit are somehow kind of expected anyways, and they have declared to turn positive profit this year. So I think a lot of the investors, including myself, would be looking forward to the performance this year. So yeah, I'm not too worried about the earning coming up. Next, LKCO. Now, for LKCO, since the hearing for Xiaomi last Tuesday, the share price for LKCO had been going every day almost. And for a stock that had been dropping quite a bit, it would be very hard for it to do a V-shaped recovery. So we need to count down first, growing from the bottom of 70 cents to the highest of 2.1. That is already the run up of 200%. So we do need to give it some time to cool off a little bit, right? So next week, I do expect LKCO to consolidate a little bit first until we have further news or catalyst. Now, for the hearing, let's move on to our Discord. It's that for now, we have a date to be May 3rd, 2021. Thanks to our Discord member. So far, the date had been changing quite a bit. So we hope that this time is actually confirmed because otherwise the deadline to be delisted would be in May as well. So I think they do have to address this issue before the deadline. And if the date is in May, so we do need to expect the share price to be consolidating until we have further news. Okay, so our ZEPP has been quite naughty. We were just saying that finally there is an earning that's not causing the share price to drop, but then it was just a delay for it to drop. So it is causing the share price to drop. I think it's digesting the earning because this earning for 2020, we did see the hit from the COVID, making the margin profit less than previous years. And because of that, the PE ratio had been increased by more than doubling. So that's why I think the market is trying to digest this. But I personally don't think it's a black swan news, because for me it's expected for the COVID to hit Huami, as a lot of the export were stopped for a lot of months. And even though we have seen recovery in the fourth quarter, it's still not 100% recover. And because they have put more expense on R&D, which we kind of want them to do, because we want them to be a high growth company and not a value company. So they do need to spend more money on R&D and marketing expense to improve their brand image and to get away from the shadow of being simply a Xiaomi supplier. So I think it would take some time for the investors to finish digesting this new direction that ZEPP is taking and accept that it's not a value stock. And anyways, I would be more excited to see the performance of ZEPP as a brand and the transition from being a supplier of Xiaomi to be a health tech company. I think this is just the beginning of it. We would probably need to change the kind of institutions that invest in ZEPP to be the institutions that's more targeting growth stock, health sector, health tech companies, and we do need more institutions to discover ZEPP, to know their potential. And when we invested in this company, we know that this is an investment that needs a lot of time and patience. But if you worry that it might take too long and you might run out of patience, you can also set a stop loss to be at 12.5, so then you don't waste too much time on it, because right now it's at the 250-day moving average support, and if it breaks the support, it would take some time to recover from it, because if it does break below this support and not able to get back up quickly, it would mean that it needs to stay at the bottom to consolidate for a while before. So you can set the stop loss if you don't want to spend so much time waiting for this, or trim the position to be a size that you can forget about. That would be my suggestion. It's completely up to you. Now, our winner today is again Luckin Coffee. In the past, I have stressed many times that for any beaten down stops, it's very important for it to pass through the 250-day moving average. As we saw in the past, many times it tried to break through, it got rejected. And today, it gapped up above to open and continue going up higher. So from the look of it, it looks like we have successfully passed through this 200-day moving average. That would be a big milestone for Luckin Coffee if it doesn't fall back below and become a false breakout. So today was really a good Friday for Luckin Coffee, as it was just more than a month ago on this day, which was also a Friday, February 5th, when it filed Chapter 15, it created a lot of panic sell, a lot of fear in the market. I remember a lot of people commented on my YouTube channel, and our Discord chat has exploded. And I think everybody had a very memorable weekend, being worried and searching everywhere for information about Luckin and Chapter 15. So that must have been a very stressful weekend. Now, today, Luckin had a great breakthrough also on a Friday, giving all of us Luckin investors a great weekend to make up that stressful weekend, right? Now, Luckin has been growing quite a few days already, and at some point we do need to expect it to backtest, and also it has reached this resistance level at around 10.5. As we see in the past, quite a few times it was rejected there, as well as today. And right now it's trying to close the big gap created by the panic selling. And it's not that easy. We cannot expect it to break through all at once. So this is why at this resistance level, we need to expect it to have some pullback, coming back to backtest the 5-day moving average and also this 250-day moving average. So if you are still looking for entry, because I think most of us have either entered or averaged down during this whole consolidation at the bottom. But if you haven't and you are interested into entering, I would suggest to at least wait for some kind of pullback first, especially when it backtests the 250-day moving average around 8.5 to 8.8, because otherwise you would always have the risk of some kind of wash sell at any time, and then you'll be trapped. And for skills, we had bought in the dip On Wednesday, my cost was around 26.8, and this morning it opened up quite low. It gapped down almost 10% and stayed flat there for a while. It took me a little bit by surprise as well. So the reason was because it announced the offering to be $24 today, which I don't understand why it can drive it down further 10% than it already did on Wednesday. But since a lot of us believe this is a great company and we don't doubt the fundamental and the industry, so when it dipped 10% this morning, I shared on the Discord that the share price had dropped so much to be at the support level from before, and also the buy-in volume was quite large because this screen cap was taken at 10 in the morning, and we could see the volume was already more than the volume of the whole day yesterday and the average of the previous days. The buy-in volume was quite large, so that's why I said I would buy the dip at around 24 and then I would set a stop loss at 22.8. so I don't lose more than 10% of what I have added. So now my average cost is slightly above 25, and after we bought it in the morning, it stayed flat there for a while until in the afternoon it went back up. I think that might be when the institutions finished shopping in the private market and then came out to the public market to shop more. So when it grew to 26.6, I shared on the Discord that if you have a large position, you can consider taking profit already or trimming the position. But otherwise, if you believe in this company, you can also keep holding it longer, because I think we already have lower costs than ARK Invest, as ARK Invest had heavily bought in the dip last week. So I think our costs should be lower than ARK Invest now. So if you want, you can keep holding it for a longer term. And for me personally, because last time I traded skills, I already had almost double my investment when I took profit from it. So that's why this time I would give it more of a risk tolerance from it last time, because I can price in the profit I make from it last time. Okay, and then another earning to pay attention to would be LKNCY, ticker symbol YJ. The earning is scheduled to be released during the pre-market on Monday. And we know that recently, more than 50% of chances the earning would cause the share price to drop. So that's why I have sent a message to remind everybody that you can sell before the earning to try to avoid this potential bomb, or set a stop loss to be around 2.4 so you don't lose more than 10% from here. Because I think with the recent drop for many other stocks by the earning, a lot of people would not prefer to hold the shares through the earning, but rather exit first and come back in after it stabilizes with the earnings out. I think that's part of the reason why we have seen some sell-off near the closing. There was some sudden drop with some volume. That's the last note for reminder. So now to sum up, we do need to expect the market to still go up and down before we finish the correction. Meanwhile, we need to focus on our individual stocks, as we see that right now not all the stocks would follow the market through. We see more diversification. Some stocks are up even though the market is down. Some stocks are down even though the market is up. So that's why we need to focus on choosing the right companies with the good fundamentals now. And I can't wait for the correction to be over, the market to be stabilized, so I can spend more time talking about our individual companies. This weekend, I'll be posting a video for our EH or NEO. So leave a comment down below and let me know which one do you prefer to see this weekend. Okay, now if you have enjoyed this video, please give me a big like and write me a great comment, and I will see you in the next video. That's it guys, hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.